After 5 days of Iran war, India has started feeling the impact. Remittances, energy, key export sectors facing mounting risks. Author, T.N. Ashok. As the conflict between the United States, Israel and Iran spills deeper into the Gulf region, India, thousands of miles away from the battlefield, finds itself confronting a cascade of economic risks that extend far beyond rising oil prices. For decades, the Middle East has been a critical economic lifeline for India, a supplier of energy, a destination for millions of Indian workers, and an important market for Indian exports. Now, as missile strikes and naval confrontations threaten to disrupt shipping lanes and destabilize Gulf economies, policymakers and economists in New Delhi are beginning to calculate the possible fallout. The concern is not limited to energy security. Remittances worth more than $50 billion, airline operations, pharmaceutical exports, jewelry trade, and even India's garment industry could face disruptions if the conflict drags on. The Middle East is not just an oil supplier to India, said Alexandra Herman, lead economist at Oxford Economics. It is deeply integrated into India's external balance through remittances, trade flows, and energy imports. Any prolonged instability there will inevitably ripple through the Indian economy. Perhaps the most immediate vulnerability lies in the vast network of Indian workers across the Gulf. India is the world's largest recipient of remittances, receiving roughly $135 billion in the last financial year. Nearly 38% of that money, over $50 billion, comes from Gulf countries including the United Arab Emirates, Saudi Arabia, Qatar, Kuwait, and Oman. The region is home to roughly 9 million Indians, many of them working in construction, oil services, hospitality, and retail, sectors that tend to contract sharply during geopolitical crises. If the conflict disrupts economic activity in Gulf countries, migrant workers could face job losses or reduced wages, said Deepa Kumar, head of Asia-Pacific Country Risk at S&P Global Market Intelligence. A sustained decline in remittances would widen India's current account deficit and potentially pressure the rupee. Remittances are particularly critical for several Indian states such as Kerala, Telangana, and Uttar Pradesh, where families rely heavily on income sent home by relatives working abroad. Ironically, economists note that in the early stages of a crisis, remittances sometimes increase temporarily as workers send more money home out of caution. There can be a short-term surge if migrant workers rush to repatriate savings, said Herman. But if the conflict continues for months and employment opportunities decline, the overall flow will weaken. India imports nearly 85% of its crude oil needs, and much of that supply comes from the Gulf region. The Strait of Hormuz, through which roughly a fifth of the world's oil supply passes, has become a flashpoint in the current conflict, with shipping insurance costs rising and some vessels rerouting to avoid potential missile or drone attacks. For India, the consequences could be immediate. Higher crude prices translate directly into a swelling import bill. Oil already accounts for a large share of India's trade deficit, and a sustained price spike could complicate inflation management for the government. If crude prices rise above $110 per barrel for an extended period, India's macroeconomic balance will come under pressure, said an energy analyst at a Mumbai-based investment bank who requested anonymity due to client sensitivities. Fuel costs affect everything from transportation to fertilizer production, meaning inflation could spread across the economy. India's aviation industry is also feeling the strain. With airspace over parts of the Middle East restricted due to military operations, Indian airlines have been forced to reroute flights to Europe and North America. Longer routes mean higher fuel consumption and operational costs. Airlines such as Air India, Indigo, and Vistara operate dozens of daily flights through Gulf air corridors. any sustained disruption could increase ticket prices and squeeze already thin airline margins. Airspace closures can adhere to long-haul flights, said Kapil Kaul, an aviation analyst with Kappa India. Fuel costs rise, crew scheduling becomes complicated, and airlines eventually pass those costs on to passengers. For Indian carriers already grappling with volatile fuel prices, the conflict threatens to erode profitability further. India's pharmaceutical industry, often called the pharmacy of the world, also has a significant footprint in the Middle East. Countries like Saudi Arabia, the United Arab Emirates, and Iraq are major importers of Indian generic medicines. Disruptions in logistics or financial systems could affect shipments and payments. The Gulf region is an important export destination for Indian drug manufacturers, said a senior executive at a Hyderabad-based pharmaceutical company. Any delays in shipping or disruptions in banking channels could slow deliveries. If sanctions regimes tighten or regional financial networks are affected, exporters may face additional complications in settling payments. Another sector watching the conflict nervously is India's gems and jewelry industry. The Gulf, particularly Dubai, serves as a key trading hub for diamonds and gold. Indian traders rely on Dubai's gold markets for imports and re-exports. A slowdown in regional economic activity or disruptions in financial flows could reduce demand for luxury items such as jewelry. Dubai is effectively the nerve center of the global gold trade, said an industry representative from the Gem and Jewelry Export Promotion Council. If regional instability affects tourism or consumer spending, the impact will be felt by Indian exporters. India's jewelry industry employs millions and contributes significantly to export revenues, making it vulnerable to prolonged economic disruptions in the Gulf. India's textile and garment exporters also count the Middle East among their important markets. Retail sectors in countries like the United Arab Emirates and Saudi Arabia absorb large volumes of Indian apparel. If consumer demand weakens due to economic uncertainty or political instability, orders could decline. The Middle East has been a steady market for Indian apparel exports, said Rahul Mehta, chief mentor of the Clothing Manufacturers Association of India. If construction and tourism slow down there, retail demand will eventually soften. That could ripple through India's vast textile industry, which supports millions of workers. The conflict also threatens global shipping lanes, particularly around the Strait of Hormuz and the Gulf of Oman. India relies heavily on these routes for both imports and exports. Insurance premiums for vessels operating in the region have already begun rising, increasing the cost of maritime trade. Some shipping companies are considering alternate routes or delaying cargo movements until security conditions improve. If shipping costs rise significantly, Indian exporters will feel the squeeze, said a logistics expert in Mumbai. Margins are already thin in many sectors. Despite the geopolitical tensions, Indian financial markets have so far remained relatively resilient. However, economists warn that prolonged instability could lead to capital outflows, currency volatility, and inflationary pressure. If oil prices spike and remittances fall simultaneously, it would put stress on India's external balance, said a senior economist at a global investment firm. The rupee could weaken, forcing the central bank to intervene. India has traditionally maintained close ties with both Gulf nations and Iran, navigating a delicate diplomatic balance. But the current conflict places New Delhi in a difficult position, deeply dependent on the region economically yet largely powerless to influence the outcome of the war. For now, policymakers are watching developments cautiously. India's strategic petroleum reserves offer some buffer against short-term oil supply disruptions. Diversifying energy imports and strengthening trade relationships outside the Middle East are also long-term policy priorities. Still, economists say the country cannot fully shield itself from the economic tremors of a major Gulf conflict. The Middle East is intertwined with India's economic structure in multiple ways, Herman said. If the conflict escalates or drags on for months, the effects will be felt across sectors, from remittances and energy to exports and financial markets. For millions of Indian families dependent on Gulf incomes, and for industries tied to the region's economic fortunes, the war unfolding in the Middle East is not a distant geopolitical drama. It is a looming economic reality whose consequences may soon arrive at India's doorstep.